Today we're going to be talking about the checklist to follow to find a profitable real estate deal. So one of the first things you've got to decide is when we're dealing with this, you have to understand your personal financial situation. Okay, what this means is if you have credit challenges, you may not be able to take out financing. That means that you wouldn't be able to do any type of a DSCR or any long-term financing, which means that you would be wanting to do fix and flips. Okay, or you may be wanting to do wholesale deals. Let's say that you've got some challenges where have a bankruptcy or you've been foreclosed on recently or something like that. That's going to put you doing wholesale deals or put you doing land deals, but may prevent you from doing fix and flips because of those things. But you could do wholesale and you could do land deals. The other thing that you can look at is BRRRR deals, where you're going to buy, renovate, refinance, rent, and then refinance. And so that is a combination of a fix and flip and a combination of a long-term finance. Well, you've got to have decent long-term finance. You've got to have decent credit to get the long-term finance, although the credit is less of an issue when it comes to the fix and flip. So the very first thing you've got to understand is your personal financial situation. And the questions you need to be asking yourself is, could I qualify for takeout financing? For the takeout financing, typically you're going to need a credit score somewhere between 620 and 660. If you're brand new, you're probably going to need to be around the 660. If you've got experience, somewhere around the 620. So this isn't like phenomenal credit, but it's okay credit. So if you don't have a 620 to a 660, the idea of doing BRRRR deals or doing any type of a takeout financing isn't going to be there unless you have a business partner or somebody else you're doing this with who does have those credit scores. So if your credit situation is below the 660 or 620, depending on if you have experience or not, you're going to want to do things to get your credit score up, but you're going to want to invest in the meantime, which means next thing you're going to look at is, hey, can I do some fix and flips? Well, as long as you don't have any collections, judgments, charge-offs, you're not in a bankruptcy, you haven't been foreclosed on recently or done a short sale or a deed in lieu in the last 3 years, as long as you haven't done those things, and there is a little bit of flexibility. I'd say you can't be in an active bankruptcy and you can't be in a foreclosure in the last year or two. So those are things we're looking for on that. But the credit score is less of a concern because this is an asset-based loan. So then you're looking at doing the fix and flips. Well, let's say you do have some of those things. Let's say you do have some collections or you have some judgments or you have some charge-offs. You have those types of things. Well, then what you're going to be doing is you're going to be doing wholesale deals. You can do land flip. Okay. The next thing you're looking at is the fix and flip. And then you're doing like a BRRRR deal, which includes the takeout financing. So everyone can do wholesale and land flips. Fix and flips can only be done by people that don't have collections, judgments, charge-offs, bankruptcy, foreclosure, those things. And then the BRRRR deal can only be done by people, you first get this loan and then you refinance. So you've got to have somewhere between 620 and 660 credit score. There are some other qualifications. It's a DSCR, which is debt service coverage ratio. So you've got those things to keep in consideration. But for the most part, if you've got that credit and you've got a decent deal, then you'd be able to do that BRRRR type of a deal. The next thing, based upon that, we're going to be asking ourselves is, what type of deal should I be going after? Well, it depends on if you need 100% financing or if you have some money that you could put into the deal. If you don't have money, let's see here. If you don't have at least 10% down that you can put into the deal, then you would want to plan on doing 100% financing. Now, to do a deal that has 100% financing is going to take more work to find that right deal that will qualify for 100% financing because the lender's taking on more risk. So that's something else that you need to ask yourself is, okay, the 100% financing is what I need to do. Realize it's going to take you a little bit longer to find a deal than if you had some money to work with, and that's okay. But that might change your decision and say, you know what, I want to do some land flips or some wholesaling in the meantime while I'm building that up, because with 100% financing, the deals need to be under 300,000. The purchase, the rehab, the closing costs, the payments all need to be under 300,000 to get the 100% financing. So if you're going for deals that are over 300,000 of the purchase, the rehab, then you're going to need to plan on at least 10% as a down payment. So that's the other thing you need to ask yourself. So it's like, you know what? I need the 100% financing. Great. Let's look for deals that are under 100,000, or let's go back and say, no, let's do some land flips or let's do some wholesales. If I want stuff that's over 300,000, then I need to make sure I've got some of that money. If I don't have some of that money, I've got to go back to doing the wholesales, the land flips, or do deals that are under 300,000. So the second thing, which we've been talking about here, is identify your strategy. What strategy are you going to be using? Wholesale, land fix, fix and flip, and BRRRR. Now, when we talk about BRRRRs also could be vacation rentals, like your VRBOs, your Airbnbs, because you could refinance and do that, or you could do long-term rentals. So when we talk BRRRR, we're talking vacation rentals, we're talking long-term rentals. We're talking all those things as we talk about the BRRRR methodology here. So now we've identified our strategy. Now, depending upon what strategy you're doing, wholesale, land fix and flip, and BRRRR, then the next thing you've got to do is you identify your area, okay? And one of the ways you identify your area is by using Investor's Edge software. Let's just say that you're in Georgia. I think the easiest thing is to try and invest close to where you're at. The only reason why you wouldn't invest close to where you're at is if you're doing land deals, because you can do those anywhere, or if where you're at is a rural area, which is going to be more difficult to get the rehab done, to sell the property, financing, all those different types of things. And so that's when you'd want to drive. So I would start where you're at and you'd work your way out. If you need the 100% financing and the average in your area is more than 300,000, then you're probably going to need to be looking somewhere else. Now, keep in mind at 300,000, that means that the after repaired value of this property, if we take 300,000 divided by 0.74, it's going to be about 405,000, somewhere in there. So if the median price range is 405,000, that's fine, because you're going to be buying that property for somewhere around 300 or less than 300. So that's what we're looking for. So let's just Atlanta, Georgia. Let's just go here. One of the first things I want to know in Atlanta, and you can go this by zip code, is, okay, what is our price per square foot? Okay, we're about at $211 price per square foot. What's happening on these? Sales price versus acting price, pre-foreclosures, gives us a pretty good idea what is going on in the area, market trends, changes. We can look over the last 90, let's look last 90 days, and let's look last 90 days here as well, just so we have an idea. Average monthly rent, average days on market, all very helpful. Days on market versus inventory, we can see that's coming down. Let's see here. So on average, sales price 421,000. So 414,000. So I mean, we're close on that, but I'm not going to rule out Atlanta, because of that, frankly, I'm going to look a little bit deeper. So that's where we say this is the area. Now let's say that Atlanta was 700,000. Then I'm going to say, okay, where's the next place I'm going to want to go? Now, obviously, Atlanta's a big area, so that might make so Decatur, or I could come up and say, hey, what are things looking like in some of these other areas? Cumberland, Marietta, so I would go and look at these areas that are close by and make determinations. What's happening, days on market, price ranges, what's the average price range. And that's what's going to help me determine my area and where I'm going to be going after. Now, if I'm doing land type deals, there's a different strategy. You want to follow that along with the land course. Now, once you've determined your area, the next thing you're going to do is you're going to put your plan together. The plan is basically what are you going to do to end up with a deal. And so we use a next deal blueprint, which basically you put in the details of your experience and what you've done, and then it'll build out a week by week plan of things that you need to do. Part of that plan is making a determination if you have money for marketing. The idea here is if you have money for marketing that you're willing to spend, it speeds up the process. If you don't have money for marketing, that's perfectly fine, but it's going to take you a little bit longer to make a deal happen because you're going to have more manual efforts. Think of it as like sweat equity. You're going to spend more time trying to do deals, which means it's going to take you longer to find a good deal. So you need a plan for that. But that's why you put the plan together, the next deal blueprint, and then that will put together a strategy for you. Part of that strategy is going to number 5. It's your marketing strategy. How are you going to get in touch with these people? So I can come in here and I can find vacant homes that are residential, that are not listed on the MLS, that have $20,000 worth of equity, or even here, this is probably easier. Non-owner occupied. There are 43,000 non-owner occupied homes, residential, single family, under $500,000 or 30% or more of equity. So I can go get those. The question is, how do I contact these guys? And there's one of a few ways to do that. I can knock on their door. I can send a postcard. I can skip trace and call. I can send an email. Okay, those are the ways that I can get in touch with these people. And even if I'm doing like a driving for dollars campaign where I'm driving to find properties that have issues and we've got content on how to do that, I still have to get in touch with those people by doing one of these strategies. And that's what this plan is going to do, is you're going to determine what marketing you're going to end up doing and how you're going to contact those people. And I'll give you an idea of what you'll have to do in order to get a deal happen. Now, this isn't a guarantee, but it gives you a good idea based upon the 20 years experience we have. It's going to be different based upon area. It's going to be different based upon your skill set, how good you are, because someone that's really skilled is going to have an easier time getting a deal than someone that's not. But you're not going to get skilled unless you use the training, follow along, and go out there and try some things, and then you'll improve as time goes on. So that's the next thing, is we determine the marketing and the plan that we're going to put together. Now, after that, what we're doing is we are working our plan. That's the next thing. It works if you work it. A lot of people put the plan together. A lot of people never even make the plan. Well, a lot of people don't even start with the courage of investing. So you're heads and tails above most people. So the next thing that we've got to do is we've got to work the plan. What does that mean? It means every week we're doing the activities or spending the money on marketing or doing our list checks or making the phone calls or whatever we've decided in that plan. Now, maybe in that plan you're saying, I don't really want to make phone calls. Great, then let's build a plan differently. You get to decide what goes into that plan and what doesn't on how you're going to contact. But at the end of the day, you are going to have to talk to people one way or another to make some of these deals happen. Then as we work the plan, a little side note, we have another called MLS Sniper. And if you really don't want to talk to people, MLS Sniper is how you can work through agents to find deals. You use Investors as software and you use agents to find that. That's more for you if you don't want to make any calls, minimal calls, I guess you could say. You'd be working with agents rather than calling people that own their houses. MLS Sniper is a great way to do that. We've got training to show you how to do that as well. Okay, so now we're working the plan. What that means is every single week I'm doing the activities that I've said I need to do in order to get my deal. And I have to do that week in and week out very consistently. Now, how long will it take you to do a deal? Again, depends on the market you're in, depends on your skill set, depends on how much money you're spending on marketing. It depends on how the price, all those things play into this. So this will build a plan out for you with how many weeks, and then you'll be working this plan and doing it consistently. Now, if you work this plan and you haven't found a deal, so let's say it's a 8-week plan or it's a 12-week plan or whatever the case is, and you don't have a deal or a prospect of a deal, the next thing that I'm going to say is we need to focus on follow up. Okay, follow up. The money is in the follow up. So do you have things that have potential that you need to spend more time following up on because the money is in the follow up? Now, let's say you've done all the follow up, you're still following up like crazy, and you still don't have a deal. This is where we need to say, okay, do we need to change our strategy or do we need to change our area? Okay, strategy or area. So maybe we were going after wholesale deals and it's just not working for us for whatever reason. Then we say, okay, maybe we should change our strategy and we should go after land deals where we actually change the strategy once we've worked our plan. The other question we ask ourselves is area. Maybe instead of Atlanta, Georgia, maybe we should go to Alpharetta, Georgia. And so we're going to change our area. Once we do that, we're going to put a plan together again. We're going to then work our plan. Okay. And if we have to, we'll start the process again. We'll change the strategy or change the area and we'll keep working the plan. So you keep at this. The key to this is not giving up. It takes time. Sometimes you'll find a deal in a couple of weeks and it just kind of falls into your lap. Other times it may take months and months and months. I've had deals that have taken me 3 years to get, and I've had deals that have just fallen into my lap within a week. You really just don't know. But at the end of the day, it becomes a numbers game, and doing consistent things on a regular basis helps the numbers average out to give you a higher potential of making one of these deals happen. Now, as long as you use the right strategy, as long as you're doing something that's going to work for you based upon your personal circumstances, and if your personal circumstances change, you can come and say, I want to change my strategy. Maybe you had some issues with some charge-offs and you had some issues with some credit scores, but those have improved, and now you want to do some rentals. Well, great, we can change the strategy and we can start going after properties that we want to do BRRRR or vacation rentals with, which is all part of this plan. The commitment to staying with it is number one, and following and working this plan and this order and this checklist is how you will get there and find the success that you're looking for to make your next deal happen.